Does it make sense to utilize life insurance as an investment vehicle? And if so, when and how? So as you may know, with life insurance, there's two categories, term and permanent. Term is coverage for a set number of years and builds no cash value, while permanent life insurance lasts as long as you do and can include a cash value component. So when we talk about using life insurance as an investment vehicle, it basically means funding a permanent policy beyond what is needed for the insurance coverage itself in order to benefit from the tax advantage growth that happens inside the policy. This is usually best done with a specific type of permanent policy, and that's a universal life policy. Now, there's no upfront tax deduction for money paid into the policy, but the growth is tax deferred. Now, the first thing I'd say when it comes to the life insurance discussion, it's insurance first. Let's figure out how much coverage you need for income protection, legacy, funding things like education for your children should you pass, and for how long you need it. So if you're able to meet that coverage need partially or completely with permanent insurance, and you have exhausted the better avenues to save in a tax advantage manner without the expenses associated with an insurance policy. And by that, I mean maxing out your 401k or employer-sponsored retirement plan, making after-tax contributions if possible, making non-deductible traditional IRA contributions, and then converting them to Roth. Once you've done all those things and you still have excess savings or a lump sum available, then we start to explore other options. The other big piece to consider is your tax situation. As I mentioned before, because of the expenses associated with investing inside a life insurance policy, it's typically not the most efficient way to put money to work. However, for those in higher tax brackets, it can be attractive due to the tax deferred growth component. So to sum it up, when does it make sense to explore utilizing life insurance as a long-term investment vehicle? Number one, your insurance coverage needs are otherwise met. Number two, you've maxed out all the other tax advantage savings buckets. And three, you're in a high tax bracket and can really benefit from that tax deferred growth. Hope this was helpful. See you on the next one.